Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Happy to be back with you again today. I'm your host, Dr. Alan. I know you'll enjoy today's show, and I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. To leave a review and a rating, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either site, search for Real Estate Investing Abundance. Once you find us, leave both a review and a rating. Subscriptions are also vital to the show's success, so please be sure to subscribe on your favorite podcast app. It's free to subscribe, and you can unsubscribe at any time. Enlightened investors, with us today is the CEO and co-founder of High Return Real Estate, LLC. Our guest has been an entrepreneur his entire life and is passionate about helping real estate investors find the right style of investing for their personal situation. Investors, let's jump right in and discover how we too can dial into residential investing with Jeff Schechter, known by his friends as Shechy. Welcome, Shechy. Before we get into real estate investing, share with our listeners and viewers an experience from your formative years that helped you to be the person you are today.
It's a big question. Thanks for having me, by the way. I'm happy to be here. The short story is I was raised the son of a clergyman. My dad was actually a fairly well-known rabbi. When I was 16 going on 17, I was overseas on a high school trip to Israel. And the cantor, my dad's counterpart in the synagogue, passed away on my birthday, actually. And the moment I got back from my trip, my dad said to me, "We don't have anybody, all the prayers, you have to be the interim cantor." And I was like, okay, it's going to be interesting. For other than during like the super high holidays where they brought in some part-time talent every week on the Sabbath, on Friday nights, Saturdays, and some of the other regular holidays, I was the cantor at that synagogue for an entire year at age 17. And it was really, as much as I hated it, I loved it too, because it was a chance for me to obviously feel okay in my own voice. And it really increased my confidence greatly. And so that was definitely a very formative event for me.
I would assume that you had done some singing before that, or did you just suddenly, your dad said do it and you just got up and did it?
Yeah, I never sang professionally or anything like that. I had a decent voice. I've always been very musically inclined. I play a couple different musical instruments. I think maybe in grade school I might have been in choir for 1 year. So yeah, I could carry a tune, but I certainly wasn't any kind of professional, but it turned out pretty well.
Yeah, good. It sounds like it did. I guess we had somewhat of a similar experience. I was raised in a very conservative Christian family, and I was a singer as well. I think it was 14 or so. I was up leading singing. Interesting. Let's get into real estate here. Is there really such a thing as passive investing? And if there is, what is it and how does it work?
It's a loaded question. I think that, first of all, many people think that owning a property, especially like a turnkey property, is a passive investment. And I don't really think that it is. It's pitched as that word turnkey gets tossed around a lot. But look, even if you're 7 states away and somebody is managing a property for you and managing your tenants and doing all that, there still has to be some attention paid to it on your part. There still has to be decisions made, things like that. No, it is not completely passive. The closest thing that we have, in my opinion, in the real estate world to passive income is actually owning a note on a property. And assuming that the person who's paying the note is not defaulting and there is no quote unquote events that have to happen, foreclosure, whatever. But as long as you have somebody paying you regularly, I tend to call that mailbox money. That's probably the most passive that you can get. It doesn't necessarily come with the same deductions and write-offs that you would get in terms of owning a property, but in what we teach and some of the things that we do with our investors is we try to create a mix for our investors of notes along with properties, because we want to obviously create some stability and we want to create some passivity to the nature of that income, but we also want to be able to maximize deductions and all that too. In my opinion, a happy investor is one that has a healthy mix of both.
You mentioned this word, turnkey property. Talk to us about what a turnkey property is.
You're good with the loaded questions. The reason I'm laughing is because that term gets tossed around so willy-nilly, and there's so many different marketers out there that use that term so loosely. In my opinion, what a turnkey, this is just my definition, and there are some that will disagree with me, and that's totally fine. But it's a property that has already been acquired. It's already been rehabbed to certain really great standards. It's already tenanted, and it is professionally managed for you, so that you didn't have any of that aggravation of doing anything within that process. That's what I would call turnkey.
And as opposed to going into doing a rehab and doing all of that, or even finding a rehabbed property that is ready for a tenant but doesn't have a tenant. So what you are really focusing upon is all of that is done and over with, and as soon as they sign those closing papers and the keys are turned over to them, the property management is in place, the tenant's in place, and all they have to do is sit back and theoretically collect the money. So that would be the next best, most passive thing, as opposed to notes, which really is pretty much a hands-off kinds of thing. But even with the turnkey, they're going to have to manage the manager.
Yep.
What are the top three most important concepts for a real estate investor to actually understand?
There's so many that are important, but I think that there are a few that stand out in my mind. Number one is really being able to remove yourself, and this is true of any type of investing, but removing the emotion from your decisions. It's not to say that you shouldn't trust your intuition, but numbers speak for themselves. And I'm talking real numbers. I'm not talking fluffy future numbers, because there's a lot of that goes on within our industry too. What is the price right now? What is the condition right now? What is the rent coming in right now? What is the vacancy rate right now? These are things that you can look at to say, how is this property performing right now? And those are hard numbers. They're not necessarily future projected numbers. So that would be number one concept, is to just be true to the numbers and don't be seduced by the fluff or by your own emotions. That's number one. Number two, obviously, debt is a huge component of being successful as a real estate investor. However, there are many investors that don't get that component, and they just, in other words, they're not necessarily using debt correctly in terms of not just the investment properties that they're buying, but all the debt that is in their life. That might be equity in their primary residence. That might be whether they're got credit card balances, things like that. So using debt correctly for your entire life, not just for your real estate investments, that is number two. Number three is, I'm a big personal development mindset guy. And I think that the other component that many people leave out and forget about is, what is your relationship to wealth and money? There are people out there that tend to sabotage themselves. They just don't necessarily have a good relationship with money, or they came from a very poor background and they have some beliefs around money that maybe it's bad or it's evil or whatever. And so I think that one really important is to make sure that you get that straight in your life, and that you have a healthy relationship, and that you understand that money is just energy. Money is a tool. And if you go out there and, as an example, if you look in our world of providing a good place to live for somebody. So as long as you bought a property correctly and rehabbed it correctly, like it's in good shape, I'm not talking about it being the Taj Mahal. I'm just saying it's a solid property and you've provided a good, safe place for somebody to live, and you've provided them a fair rent and a fair exchange of that energy, then you are entitled to make lots of money. That's a very healthy exchange of that energy. So I think you just have to get straight with that relationship with money and success. And as long as you are, that I would call, I wouldn't say there's one of those three that you asked that's more important than the other. In my opinion, they're all important. They would stand all equally as number one.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. Sounds has some excellent advice. And yes, three important concepts to certainly get in place. And even with one of those components out of place, it could lead to definite problems. Can you share with us one of the dumbest mistakes you've made in your real estate investing career?
The list is so long, I don't even necessarily know where to begin. And thankfully, we all learn from our mistakes. But back in the day, before the big crash in 08-09, I had, for a very brief period of time, a small flipping business with a buddy of mine down in Texas, now an ex-buddy. And I was the money guy and putting things all on my credit, my name, and he was the construction guy. He had a small construction company. And although we did have a few successful flips, when the market turned, I was not in a good position of being the money guy. And we had an agreement, it was on paper, that, hey, if we ever get into a city, we'll always share the profits, 50-50. But anytime we have 3, 4, 5 properties, whatever we're doing, and we have a payment to make, then we would just share equally in the payments until that project was finished. When the market tanked in 08-09, whatever it was, and values were dropping, and we all know what happened there, I was left holding the bag. We got into month 1 when we had to make a payment. Now, we had been in business, I don't know, somewhere 18 to 24 months already at this point. We had done a few deals. Month 1, it's like, hey, dude, we got to make some payments. And he was like, well, I don't have any money. I got 2 ex-wives and 4 kids. It says right here on this piece of paper that you're responsible. But so that was a really, really dumb mistake, and just going in and not necessarily understanding proper business structures and ways to protect yourself. And literally, I was left holding the bag. And the next few months after that, and nearly declaring bankruptcy and negotiating with creditors and nearly losing my own personal house, it was within hours of my own personal house getting sold on the courthouse steps till I finally figured out some things to save that. So there was a lot of ugly fallout that came as a result of the big mistake being just in the initial setup.
Sounds like a traumatic experience, and I'm sure it was a huge learning experience. What was the primary thing that you learned from that experience?
What I alluded to is that you want to set yourself up for success. You don't want to just go into something because you think you can be successful at it. We did do a few successful deals, but the exposure in that company was all mine and none of it was his. And if you're the one taking on all the exposure, then you also should be making most of the profit. There tends to be a lot of partnerships that are 50-50 in nature, but they're not necessarily 50-50 in fairness. And that was, yes, it was a very difficult time for me, and that was a very difficult lesson to learn. But I would say just make sure you're set up correctly, that you're protected, that you've got the right entities in place, and that you have some fairness set up to whatever your current business structure is.
Good advice. A hard lesson learned, but one I'm sure you have benefited from greatly in the years following.
Yep.
In terms of location is real estate. What about your advice in terms of investing locally or investing out of state?
They both have merit. It's a question that comes up a lot. I think if you've lived in an area for a long time, then you obviously have a feel for that local real estate market. There is some comfort, especially for earlier or newer investors that don't have a lot of properties, or maybe just starting out with their first one or two, that say, maybe I want to do something in my own backyard. Now, there are markets out there that even in your own backyard, they're just so ridiculously expensive. And unfortunately, the price to rent ratios just don't. It goes back to what I was saying before, is what do your real numbers look like? So don't be again seduced by that comfort zone of saying, okay, it's in my backyard, so I feel better about it because I know the market. Okay, I get that. But at the same time, there are some wonderful markets that are out there. And given that we're all on the internet and the ability to communicate back and forth with pictures and videos and things like that is so much greater now than it was 15 or 20 years ago, that it's not nearly as scary investing a few states away. And in that regard, obviously, that's why companies like ours are successful, is because we operate in markets and in neighborhoods within those markets where we're going to get really strong returns for those investors. And we put out a product that is designed, obviously, to make an investor maybe think twice about investing in their own market, as long as it does not make sense to operate in their own market. For example, we're in Indianapolis. So if I had an investor come to me and say, hey, bro, I live in Indianapolis and I want to use your company, I'm like, why the hell would you want to do that? You already live here. You already have the advantage of understanding the market. My company is providing a service for people that don't have the advantage that you have. So we really don't have, unless these people are super old and infirmed and just want us to do everything for them, which has happened. We've got a few clients here, but the great majority, I would say 95% of our clients, are typically living in areas where it does not make sense for them to invest in their own backyard.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios, selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
I totally understand that. I live in an area where rents to value are totally out of skew, and finding rental properties in my neck of Appalachia is an enormous challenge. So I have had to look outside of Appalachia for investment opportunities. What kinds of properties do you invest in, and why do you invest in those properties?
We typically look for properties that we can do a value add. The market is tight right now as of this recording, and coronavirus obviously changed a lot of things, and interest rates are super cheap. And when money is more readily available like that, then, obviously it becomes a seller's market. In order for us to find good deals, we tend to look inside of in Indianapolis. We're in a big city, and we're in a very big, stable city. And we tend to look in working class neighborhoods where the property itself might be in a condition of, say, a C class, but because it's in an area that's going through some churn, or there is some good rehabs in the area, we know that we're safe in terms of putting a good rehab into it, and we're still safe on values. In other words, we're not over fixing for the values of the neighborhood. we cut our teeth on some of the lower middle class, lower class, C class, working class properties where we had rents, say in the $600, $700, $800 range. And we tend to be moving away from that more now into things that will rent for, say, over $1,000 a month. We give up a little bit on price to rent ratios there, but we tend to pick up a little bit more on potential for appreciation. And we also find that the tenant base is a little bit easier to manage. We have less issues with non-payers and transiency and not renewing leases and things like that. Like anybody else, we're investors too, and we keep learning every time we do a few more properties. And it's not a perfect science, but at the end of the day, you pretty much got to say, okay, yeah, the numbers make sense, the neighborhoods make sense. We're going to pull the trigger and do what we do best, and let's just rock and roll. It doesn't mean that every deal turns out perfectly. It just means that most deals turn out really nice. And then there's always that one that's maybe this one wasn't so great, but like anything else, there's strength in numbers. One of the things that I see a lot of newer investors get really hung up on, and it goes back to a previous comment about emotions, is that they buy their first investment property and their whole life and emotions are tied up in the performance of that property. Now, if you owned 15 or 20 properties, you would not have that mindset. There's just a natural spread of risks now as a result of owning multiple properties. So we always encourage investors to make sure that don't just put all your hopes and dreams into one property. It doesn't make any sense.
So the class that you're primarily involved in is single family, is that correct?
Yeah, we do duplexes, and once in a while we'll do a triplex or a fourplex. We tend to find that in our market, as soon as you get over 2 doors and all the way up to, say, 30, 40 doors, all that kind of stuff in between tends to be really problematic and, for us, traumatic. And so it's just not stuff that we want to mess with. The times that we've worked in those arenas, it's just been extremely difficult. And then when you get over that 30, 40 doors, again, you've got enough economies of scale that you maybe have an on-site manager and things like that. In a duplex, if it's fixed up nice and managed, you can still get some stability of tenant base. When you get into the triplex and fourplex stuff, they tend to be older homes that were jigsaw puzzled out, and they don't necessarily have great floor plans, and you're getting down again to that lower priced rent, and then you're getting back into that tenant base that's a little bit more problematic. Yeah, single family homes, we look for stability, or a duplex when we can find them and create that stability. That's really the meat of our bell curve.
Who is the ideal investor who would come to you? What is their profile? What is their investment experience? What sort of capital do they need to initially begin investing with you?
It's a great question. There is a spectrum there to my answer. So if you start just talking about who they are, this is a person who likely is a professional and they enjoy what they do. They have no interest in doing anything else. They're working in a field that makes sense for them to be working at. We see certainly a broad variety of incomes. We have people that make maybe only $60,000, $70,000 a year, all the way up to making hundreds of thousands of dollars a year, and sometimes even into 7 figures. They have either a working knowledge of investing and own a few properties already. And then we bring obviously some more resources and some really interesting education to the table too that they may not get elsewhere, and some properties that they may not get elsewhere. But we also have people that are newer to the game as well. And we tend to, we don't sell that many to people that are just buying their first property right out of the gate, because what ends up happening is usually the people that are buying that first one out of the gate are, like we talked about earlier, they're learning some lessons out there in real estate land. But sometimes they are expensive lessons, and maybe they were seduced by numbers elsewhere, and maybe they didn't make as good of a decision as they could have. And then they get a little bit wiser and they go, oh, okay. Like they may look at me and go, now I get what Shechy's saying. And there's a lot of things that maybe I've said today that a newbie may not necessarily agree with. and that's totally fine. But everybody gets to a point where they go, okay, I'm understanding a little bit bigger picture now. And not only do I want to understand an even bigger picture, but I also want to understand a much smaller picture that pertains specifically to myself. It's not about the property, to my own nature of the way I operate in terms of what my own risk-reward relationship is, right? And what my spare capital is, what my own personal credit score is, how I intend to leverage debt correctly, all that stuff comes into play. And one of the things we've been, as you can tell by my comments, been focusing on a lot more lately is really helping investors to be more selfish and to say it's not always about the property. Let's look at you and what you're trying to do. Because most of the real estate, let's face it, all the quote unquote training out there and the education that's out there, and I use those words loosely, and by a lot of gurus, which that term I'm using very loosely, is designed more to, it's a marketing funnel that's designed more to really just be generalized and sell people even more education. It's not necessarily designed to fully empower the investor or to be personalized to that investor.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
Thank you for sharing that. That's one of my pet peeves. Gurus in quotation and educational material in real estate. And I liked how you put that. It's more marketing ploy than it is educational and informative. Well, Jeff, you've shared some very important concepts and ideas for our viewers and listeners. And I think that they would enjoy getting in touch with you. And I know you have something of value to share with them. So share with our viewers and listeners how they can get in touch with you and what you have to offer them.
Yeah, and thanks for that opportunity. Obviously, my company is called, you can see that, High Return Real Estate. So you can see everything that we're doing at highreturnrealestate.com. If you want to contact us there, there's all kinds of places. If you see a property you like, you can fill out a contact form. There's another separate contact page. But there is a hidden link that I want to give you. You will not see this on the site. The only way you'll know this is by seeing or hearing this broadcast. highreturnrealestate.com/cash flow, all one word. And on that page is a description of this educational process that I was alluding to. And what we do basically is offer your watchers, your listeners, an opportunity to get a discovery call with our gal that handles investor relations. And again, it is that opportunity for you to be selfish, like I had talked about. Let's find out a little bit about you. Let's find out about what your goals are. And if it makes sense for us to put our network of experts that have helped myself, my business partner, my team, our investors really do things that they are not going to be able to find anywhere else. And if you want to be part of that, there is a free discovery call. And it's no obligation. And look, if that's not for you, that's fine. But at least gives you an insight into things that are being done differently and programs that are there to help you be selfish and design your own wealth track.
Excellent. So, enlightened investors, I encourage you to take advantage of this free opportunity. Shechy, let's move into the last segment of our program here, and let's get to know the person behind the real estate success story. You have shared with us one of the dumbest things that you have done in real estate, but share with us one of your most difficult setbacks in life that doesn't necessarily pertain to your entrepreneurial experiences or to your real estate investing. And how did you come through that time, and what did you learn from it?
Probably one of my lowest periods was after the event that I had already described. And really, I had lost everything. And I had lost everything that I had saved and then some. And I'm a very easygoing, happy-go-lucky guy. I've always taken care of myself physically, mentally, spiritually. And I went into a pretty deep funk. And there was a couple of months there that I didn't even really want to get out of bed. And then self-medicating and smoking too much pot. And I was never a big drinker, but I always, weed was my way of escaping. But yeah, it was a really difficult period for me. And there's lessons in everything. But when I look back on that, I feel like I had to go through that. There was a reason for me to be that low, because when my favorite word in life is bittersweet, right? It really describes what life is all about. And you can have all this fantastic life that you can build for yourself, but it's really, the big lesson there is it's very hard to appreciate the highs if you haven't experienced the lows. So the big lesson there really is, can you appreciate the lows for what they're giving you? And when you're in it, it's nearly impossible to see that. But after, and this was obviously many years ago, and certainly I've had some time to mellow and mature since then, but I look back on that as a really important thing that happened, not just in terms of my education in terms of real estate and business structure, but in terms of my own psyche and my own way that I look at life and approach life.
There is an old saying that it's the darkest before the dawn, and I have experienced that a couple of times in my life, and though I don't relish those dark experiences, the weight's lifted from my eyes because of those experiences, and I'm really thankful for them. Thank you, Shechy, for sharing that personal experience. For what in your life are you most grateful for today?
God, that list is so long. I have a great life. I have amazing friends. I have a group of people that I play music with regularly. I love to jam. I've got my main business partner in this operation is one of my best friends, and he's just an amazing, positive, successful guy. My other business partner on the other stuff that I talked about, the cash flow plus side and all the educational stuff, is brilliant. One of the smartest guys I've ever met. And I'm just blessed with some great relationships, good health mostly, and a great business. And I have some great relationships with some of our investors, and we've assembled my right-hand gal and the gal that does our investor relations they're both just incredible human beings. And some of it, as I just look at it, is maybe it's luck or I've been blessed or whatever, or it goes back to what I was saying before about having been through that darkness. I so much appreciate the light. And the thing that I recognize too is that I'm valuing relationships and experiences much more over things. Okay, yeah, I've got a nice house, I've got a nice car. Okay, great. And it's nice. But those aren't the things that get me jazzed. Like tomorrow I'm going to a jam session. That gets me jazzed. So it's because it's just, I know it's going to be a fantastic experience.
What are 3 good things that have happened to you in the last 24 hours?
In the last 24 hours, the sun came out and it's super beautiful here now. And we've just gone through a period of really cold, rainy, and so I'm very grateful for the sunshine. I also had a friend of mine send me a video last night that really supported some of the stuff that I've been struggling with during this whole Corona situation. And we tend to always want to be right and get into arguments and things like that. And I'm not necessarily an arguer by nature, but I am pretty passionate. And I've been learning this lesson about, we've all learned some pretty big lessons during Corona, obviously. And one of mine is, how to not get triggered by all of the atrocities that I see going on in the world, and how to learn to accept it as part of the bigger picture. And so somebody sent me an email last night that was really, I had come to some conclusions on my own. And this video was from a person who's more of a spiritual leader. And she really helped cement what I was feeling. So that would be number 2. And number 3 is I also was at a project of ours yesterday, and really this was a very old beat up duplex that just needed a gargantuan amount of work, like down to the studs. And in that area that I had mentioned where we were talking about taking some chances of going from a C class to a B class, and I was there yesterday at the project and super grateful for the way it's turning out. It's really going to be a fantastic property when we get finished. We probably still got another couple months yet till it's done because it's a huge project, but it's going to be really sexy when it's finished.
That's one of the good things about buying distressed properties is being able to see those finished products that are vastly different than where they begin.
Yeah.
How are you putting your success as an investor and entrepreneur to work to create universal well-being and abundance for all beings?
God, I love that question. That's great. It touches a little bit on what I had said earlier. I feel like we are in the process of moving into a world that is a much higher vibe than what we have been experiencing up to this point. We're seeing a lot of darkness in the world that was always there. It was just hidden from us. And now it feels ugly because it's being so exposed. But I look at it as a good thing. The exposure is such that, okay, now we know it's there. How do we clean it up? How do we move on? How do we move to a much greater world where we're living in truth and this kind of stuff is not hidden from us? So looking at our success is when I go out and as an investor, do better financially, make more money, I create more freedom in my life. It's the same thing that I'm doing with helping our investors, creating more freedom. We're doing that with our team too, and we're helping our own internal team have more success. Everybody has this opportunity to break through whatever mental constraints are there and to build a better life for themselves. In so doing, we set examples for others. And we show them that you don't necessarily have to be, I'm not slamming a job right now, but you don't necessarily have to be a slave to your career. We all have choices. And so I feel like the more freedom that we have, the more time we have to be healthy in a lot of other ways. The more time we have to take care of ourselves physically, spiritually, emotionally, involve ourselves more with those relationships that I had talked about earlier. All those things raise the vibe. They all do. So that's really my big picture is how can I lead by example for others, shine that light? How can I teach my team? How can I teach our investors to do that? And then how can we show them that they can be examples too for other people around them? And it just continues to raise the tide.
I appreciate your focus. I think if we are going to make any difference in the world and really provide well-being for others, we really have to know ourselves first of all, and then be able to focus that energy in a way that flows really organically from who and what we are. We've come to our last question here, Shechy. So when you leave this world, what do you want as your epitaph? And epitaph is not necessarily the literal thing written on your tombstone, but how do you want to be remembered?
For me, it's really simple. I would say, I don't know what the words are exactly, but Shechy was a guy who was loved and who mattered and made a difference to those around him. That's it. It's very simple. I'm not out there to be the world's greatest scientist or the world's greatest entrepreneur. Like, everybody's got their skill sets. And I'm living, in my opinion, I wouldn't say it's my perfect life, but it's pretty darn good. And I always want others to be able to experience that as well.
Shechy, thank you for being on the show. Thank you for enlightening our enlightened investors. And it has been a definite pleasure having you today.
Thanks, Dr. Allen. I'm appreciative of the opportunity to be here. This was a great conversation, and I loved all your questions.
You have a great day.
You too. Thanks a lot.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital. a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.